Hey everyone, welcome back to the channel. We have big news regarding NIO, Workhorse and Tesla stock. Today we'll talk about why all the directors of Workhorse are selling off their shares and what you need to know about this. We'll talk about NIO stock price and where it will be headed, and finally we'll be talking about Tesla and the enormous vehicle recalls they've performed and the index fund issues since Tesla's been a part of the S&P 500. This video is full of great information, so it's in your best interest to stick around to the end so that you can make smarter choices and be more successful with your investments. But before we begin the video, I just want to say a really quick thank you to those who have been liking, commenting on the videos and subscribing to the channel. It's awesome to see the community is so friendly and supportive, and it makes putting these videos together even more fun. I love having conversations with everyone down there in the comment section, and I respond to every one of your comments. So if you want to talk stocks or what you ate for breakfast today, I'm all ears. Let's dive right into it. As an investor of Workhorse, I like to know what's happening with the company by reading up and researching it almost every day. So when I saw this headline saying, Workhorse director sells $240,000 in Workhorse stock, it made me curious. Why did a director sell off $240,000 worth of shares in Workhorse stock while the stock is nearing its all-time high? Peter Lynch famously said, "Insiders might sell their shares for any number of reasons, but they buy them for one only. They think their price will rise." Does the director have little faith that the company will continue to grow? Or does she have a reason to believe it will drop so she's cashing out now? Mind you, she sold 8,000 shares at a price of $30 per share, leaving her with less than 4,000 shares in the company. So this is a substantial cash out for her. This baffled me, so I continued to do a little digging and I wanted to see what other directors are up to. All trades of this nature are tracked by SEC, so I went to SEC Form 4 to see what everyone else was up to, and I came across this graph. Looks like selling off is a craze right now among directors. The blue lines represent buys and the red lines represent sells. Notice how there are no blue lines. Just 2 days ago, another director sold $2.5 million worth of his stock. With shares increasing in value rapidly, analysts rating it a buy, and the USPS contract announcement yet to be made, do these directors know something we don't? Do they think the stock is overpriced and part of this rumored EV bubble? I'm a little lost for words. I can understand cashing out, but to cash out over 70% of your holdings seems a little suspicious to me. I want to know what you guys think of that, so comment below if it's a normal thing to do or if she's anticipating a drop in share price. Overall though, Workhorse still appears to be a winner. Analyst Jamie Perez said that, and I quote, "Workhorse is the pioneer in the US market for commercial electric vehicles, having proven technologies. There are approximately 400 Workhorse electric vehicles currently on the roads, covering more than 8 million kilometers in total. Workhorse has few rivals and is in good standing to be the ideal candidate for the USPS contract." Workhorse was also backed by the investment firm R.F. Lafferty, who recently rated Workhorse stock a buy rating with a set target price of $29. Since receiving the encouraging recommendation, stocks have gained nearly 45% over the past week. So despite a bad Q3, slow production for Q4, and huge director sell-offs, in the public eye, Workhorse looks like it's still a strong investment stock, with 4 out of 6 analysts rating the stock a buy, and the remaining 2 rating it a hold. NIO stock is currently trading at an all-time high. I made a prediction just a month ago saying it would hit $50 by the end of the year, and I've never been happier to be proven wrong. There's a lot of speculation out there regarding an EV bubble, but let's face it, any stock that does well will have people claiming its bubble will pop. And then when there's a minor correction or a drop for a day, they're the first to scream and shout as if they know this week's lottery numbers. It looks like the EV stock sector is a little inflated. Perhaps investors got a little too excited and are now pulling back, and that's why we saw a 3.6% decline in BYD, 7.4% drop in Li Auto, and XPeng dropping 9%. This is enough to get any investor worried, but don't be too concerned about NIO. That same day, it was up 0.3%. In fact, since then, NIO's been given a great rating by Stock News, who wrote an article claiming it was a stock that will double in 2021. A huge reason why NIO is competitive in the EV space is from the support it receives from the government. Just last year, it received a $1 billion bailout. The Chinese government is getting serious about the transition to electric and is pulling several policy levers to help support the EV industry. These incentives mostly include purchase rebates and tax exemptions. Some local governments in China have restrictions when it comes to securing license plates in order to reduce the amount of cars on the road. These restrictions don't apply to electric vehicles. China is working on increasing the market share of EVs from 5% to 25% by 2025. That's a huge goal, and in order for them to pull it off, they'll probably have to implement further pro-EV policies and deductions. This puts NIO in a very strong position in China, with their own government carving the way to success. NIO is still backed by 12 out of 13 analysts. 9 of them recommend buy, 2 recommend hold, and just 1 selling. That same CNN forecast also says they predict the stock will go up on average 478% over the next 12 months. I personally think that's a little high, but hey, NIO has proved me wrong a few times now, and I've been happier because of it. Tesla stock starts off with a little bit of bad news. They've had to recall over 9,000 Model X cars. The report says that the front and center cosmetic on the roof of the Model X may have been adhered incorrectly, meaning when driving down the motorway, a piece of trim can separate from the vehicle. Tesla has also recalled another 400 Model Ys because the bolts connecting the front upper control arm and the steering knuckle weren't tightened correctly. Both of these issues are an easy fix for their technicians, and Tesla did release a statement saying that neither of these issues have caused any accidents or injuries that they're aware of. This bad news didn't seem to frighten many investors, as not long after, Tesla's share price reached a record high. Tesla has also released a statement saying they're going to invest $6 million into building a factory near Shanghai, which would produce 10,000 chargers for their vehicles. The factory is said to be finished and ready for production as early as February 2021. Tesla's sharp increase in share price has actually caused issues for the index funds. Since being incorporated into the S&P 500, Tesla stock has risen by 41%, meaning its equity comes to a whopping $543 billion. The problem here is that since Tesla is so large now, it ranks as the 5th or 6th largest company in the S&P index, and the more valuable Tesla gets, the more shares the index has to buy, and the more stock an index fund will buy, the higher traders are willing to bid on a Tesla because of the inevitable buying spree. This is called indexation, and it's a positive feedback loop you don't see all too often. Indexation isn't the only thing that will drive Tesla higher. Morgan Stanley analyst Adam Jones upgraded Tesla shares to a buy last week, and analyst Garrett Nelson has set his new Tesla price target at, wait for it, $650 a share, $100 over its current high. So that's awesome news for Tesla shareholders. I put a lot of time and effort into this video, so if you enjoyed it and you stuck around this long, you're a legend and I appreciate you. So like the video and subscribe to the channel. Thank you, and I'll see you in the next video.